So once a year, I'll do a portfolio rebalance, although it's more like an audit or a review rather than a total rebalance. So let's go over how to do one, when to do one, and if you even need to do one at all. So first of all, do you even need to do a portfolio rebalance? Now, the reason people do portfolio rebalances is to make sure that their mix of assets, the mix of companies that they're investing in, are all still in alignment with the goals that they set out to begin with. So maybe if your portfolio isn't diversified enough, you'll go in and buy some new companies. Maybe companies that you already have either increased or decreased a substantial amount, and you just want to balance things out with the rest of the companies that you own. Because generally companies and assets don't usually move the exact same way. Some will increase in price much more than others, and some will decrease in price much more than others. There's a lot of drift. Not so much with ETFs, of course, but with single companies, that's definitely the case. So going in about once a year helps you to keep things in alignment. But you actually don't need to do a portfolio rebalance. I mean, especially if you've already got a good diversified portfolio already, there's really not a lot of reason to do one unless your portfolio needs it. And especially if you have exchange traded funds, then you absolutely don't need to do a portfolio rebalance because the fund manager is always rebalancing that ETF all the time anyway. So that's not something you need to worry about. Now, I do this once a year, but when I go in and look at my portfolio, I don't always change things. Sometimes I like where everything is and I just keep things as they are. So instead of actually calling it a rebalance, I actually like to call it a review. So going in and just reviewing that your portfolio is still meeting your goals. So how often should you do it? I do it once a year, and I usually choose a month where not a lot is going on. So I'm usually choosing a month where there's not a lot of dividends being paid out and there's no ex-dividend date that I need to worry about. So this is usually for me around May, or sometimes I'll leave it to the end of the year around November, December. So this way I'm not missing out on any of the big dividend months, and there's no ex-dividend date that I have to be worried about that I need to be holding for. So they're pretty quiet months, so that's the months that I like to do it in. So if you're not a dividend investor, then choosing a quiet month is still a pretty good idea, somewhere where companies aren't reporting, so not near interim reports or final reports from companies. Try and pick, according to your portfolio, a pretty quiet month when it comes to activity. Next thing I do is go and look at what my actual portfolio is doing, and in particular, I'm looking at what my dividend yield is, which is going to be different to what's reported because obviously I bought at a different price. So to work this out, what your dividend yield is, you work it out on the price that you paid for that company, or you can average it out if you've bought at different time frames, and that's divided by the last 12 months of dividend payments. So I keep this as in a spreadsheet, and I'll put the formula up on the screen so you can work it out yourself, and that's going to be your dividend yield. So what I'm basically looking for to see that my dividend yield is still good, it's still growing, and it's still giving me the income that I want. Price is less of a concern for me. Like if the price has dropped, that's not as much of a concern for me unless it has dropped like completely dramatically, like the company is not doing well financially and the price has dropped for that reason. That's a different scenario, but usually the dividend has dropped also if that's the case. But most of the time, none of these things really change that much, and my dividend still looks good, and the company, whether the price is up or down, still looks fine. So there's not a lot of times that I actually change things up. If it's doing well, I keep things as they are. But there are different other ways that you can do a portfolio rebalance, and I'll just go over quickly some of the more common methods. One of the most common methods that people do when they're trying to rebalance is to keep things very even, like all of the companies that they hold evenly weighted pretty much across the board, which is a perfectly fine strategy. It's not one I use, but it can work for you if you want to keep things completely diversified. So maybe you have 50% of your portfolio is ETFs and 50% is single stocks, and of those single stocks maybe you hold 10 and each of them is about 5% worth of your portfolio. So everything's even and you treat all the companies the same. Another method to do it is to focus most of your money where the biggest gains are and just hold less of those companies where the gains aren't as great. You're still holding a balance, but you're holding a higher portion of those companies that are doing much better and a lesser portion of those companies that are doing not as well, but might in the future become much better companies. So you still want to hold them, but you just don't want to hold as much as the companies that are doing really well for you. And the last method is just weighting your portfolio based on the size of the companies. So the larger the company, the more of the holding that you have. This is more in line of what an ETF might do. They usually hold bigger portions of companies that are higher in market capitalization and less of companies that are smaller cap. So you could follow a similar model if you wanted, although You probably just should buy an ETF if that's what you're going to do. But when it comes down to it, rebalancing or reviewing your portfolio is really just about keeping it in balance of what makes sense for you and what your risk profile is, how much of each company or fund that you want to hold. So it's going to be different for everybody. There's no magic formula. As long as your portfolio is diversified, that you've got a good mix of companies, a mix of assets, maybe even, you don't have to rebalance every single year if everything is going great, if everything looks fine. But I hope this video has helped you decide whether you're going to rebalance and how you're going to rebalance, whether you do it at all. So happy investing, and I'll see you in the next video. Bye.